Hello, welcome to my channel, my dear friends. My name is Avilash and I'm your trader next door. In this video, I'll be analyzing the chart of NZDUSD, New Zealand dollar, US dollar. So if you're watching my videos for the first time, then please subscribe to my YouTube channel for regular market analysis, and do not forget to check out the Forex analysis playlist on my YouTube channel for the analysis of other currency pairs. So let's get started. So this is the 4-hour chart of New Zealand dollar, US dollar, my favorite 4 hours time frame. And as you can see clearly on the chart that during the last trading hours, market was bullish, market was trying to go up. But if I zoom in, then you can clearly see that during the last trading hours, market saw some price rejection from above. Market was bullish, bulls were there in the market, they were trying to take the price upward, but when market hit this black line or this trend line or the resistance, yes, the resistance, when market hit this resistance level, market saw some selling pressure from above. As a result, we can clearly see that though candle is green, but there was some price rejection from above, which clearly states that this trend line is still valid, okay, or this trend line is still acting as a dynamic resistance for the market. And if you just observe the chart, okay, if I tell you to just observe the chart, then you can clearly see that this chart is in downtrend, okay, this chart is in downtrend, and this market is following this trend line as the resistance for the market. In clear words, whenever market is trying to go up, it is facing selling pressure from above. As a result, it is unable to do so, okay. And and on the downside, okay, we have got this black line as the support for the market, okay, 0.6942. We on the downside we have got 0.6942, which is acting as a support for the market. And you can clearly see that after the FOMC meeting, when market saw heavy selling pressure, when there was heavy selling pressure on the market, this was the level that provided the required support. This was the level that provided support to the market, and from there market bounced, okay. And this level is still acting as a support for the market, okay. But if we just look at the structure here, okay, if we just look at the structure here, then we can clearly see that this is a, sorry about the bad handwriting, descending triangle pattern. Generally, I do not talk much about chart patterns and all, but here we can clearly see that market is following a descending triangle pattern, where market is following a trend line as a resistance, and on the downside we have a concrete support, okay. And as a result, we have a pure descending triangle pattern here. And generally, whenever we get a descending triangle pattern, then there is a good possibility that market will break this support level and market will continue its downtrend. Therefore, considering the descending triangle pattern, the first trading opportunity in this market is when market will cross this particular support level, 0.6942 level. You can short the market once it crosses this level. But keep in mind one thing, as this level is acting as a support for the market for quite some time, and this level looks very strong to the market because this was the level that provided support to the market when market was falling. Therefore, do not short the market right away. Wait for some time, wait for a couple of hours, let's say 3 to 4 hours, and just observe the price. If you see after 3 to 4 hours that yes, selling pressure is there in the market and market has crossed or crushed this level, support level, then you can short the market, okay. But right now you can see that market is just standing at the trend line or the resistance. Therefore, let the market open on Monday and just see after the market opening how the price reacts or how the price does, okay. If you see that price is about to reverse from here, or if you see that price is not in a position to go up, price is struggling, then you'll get the confirmation that yes, this trend line is still a valid resistance for the market and this is a descending triangle pattern. You'll get the confirmation in the form of a shooting star, price rejection from above, or a red candle like this. Once you get the confirmation that yes, market is not in a position to cross this trend line because sellers are sitting, they are not allowing the price to go up, you can short the market at this trend line. Your take profit target will be this level, this support level. This will be your take profit target. Okay. If you have not got these lines in your charting platform, then I would request you to draw these lines in your charting platform. You can easily draw these lines in the 4 hours time frame also. Okay. So whatever you're using, you can easily draw these lines here. Please draw these lines so that you can analyze the chart better, understand the chart better. Okay. On the other hand, after shorting the market, okay, you need to exit here. When market will be in this position at the support level, then also your duty is not finished. You need to observe the market again. Just observe the market, how the price is doing. If you see that price is about to reverse, if you see that market is trying to go up from here, or if you see price rejection from below or market forming hammer kind of candlestick pattern, then you'll get the indication that you can go for a buy order here. Okay, you can go for buy order, and you can go for buy order once you get the confirmation that yes, market is about to go up from here. Ultimately, in the descending triangle pattern, market crosses this support level. But until and unless it crosses this support level, we can buy at the support level, is not it? Why should we waste the opportunity when market is about to bounce from the support level? So once you get the confirmation that market will be bouncing from the support level, you can go for buy, and you can short the market at the resistance. Once you get the confirmation, that's it. Okay, so this is how you need to trade in the NZD USD chart here. And if you would like to check the Forex sentiment meter, then you can see that in the Forex sentiment meter also we are not having a clear picture because 54% traders have taken short position and 45% traders have taken long position. Even retail traders are also confused. Most of the time they lose money, but still here they are not, they are quite in a confused state right now. So the Forex sentiment meter is also not giving us a clear picture. Anyways, if you would like to check the Forex volatility meter, you can check the Forex volatility calculator as well. Because see, if you take a position, then volatility is important, movement is important. Because if the market does not move after taking a position, then it's of no use. We cannot make money if the market does not move. So check out the Forex volatility meter. You can see how much it is moving. You can see in 1 minute it is moving by 1.5 pips. In the 30 minutes it is moving by 4.1 pips. In 1 hour it is moving by 7.1 pips, and in the 4 hours it is moving by 23.2 pips. Daily it is moving by 48 pips. Not much, but still it is moving. So check the volatility. If you see that volatility reduces to half on Monday, then it's of no use of trading. Okay, better you look for other opportunities on other currency pairs. Okay, so keep your eyes also in the Forex volatility calculator, and hopefully you have already understood what you need to do in the NZD USD chart on Monday and in the coming week. So this is it. Hopefully you have understood. If you have liked the video and found the video informative, give a thumbs up and subscribe to my channel for regular market analysis. Thank you so much. All the best. Take care. See ya on Monday.